Hey, Bulls and Bears, you're watching Bull, Boom, Bear, Bust, back with another dose of economic reality. Things are getting very, very interesting, and we've got a lot of news to uncover today. Companies begin to panic. We're going to talk about what that means. Are oil prices ready to plunge? Well, oil insiders are selling a lot of stock. We're going to take a look at that and try to come up with a conclusion for you. Inflation caused by wages that are too high. There's actually a major financial publication out there making that claim. It's ridiculous. We're going to take a look at it. We're going to wrap it up with housing. The median home price here in Orange County, California. I say here in California, I'm actually in San Diego, but in the state that I'm in, here in California, Orange County specifically, $1 million median home price. Simply outrageous. Let's go ahead and get started. Recent article out of Fortune: companies are beginning to panic because of the lockdowns that we're seeing over in China. And they're saying it's going to make inflation and the supply chain nightmare even worse. A supply chain nightmare. 1 in 5 container ships is now stuck at the ports worldwide, with 30% of the backlog coming from China. And what they're saying here is that even if these strict lockdowns that are happening over in Shanghai because of the new or re-emerging health crisis, US ports will likely still be slammed with a wave of pent-up cargo from newly reopened factories in China. And that's going to lead to higher freight rates and worsen the congestion at ports. And we're likely going to see bigger jams than we even seen previously at US ports in Los Angeles and Long Beach. Ongoing and worsening problems at these ports means rising costs for companies and more inflation for US consumers. Now, John Bree, the chief risk officer of supply at Wisdom, said, quote, companies are beginning to panic. The downstream impact is coming and it will be heavy. The latest China lockdowns combined with the conflict over between Russia and Ukraine is too heavy of a burden. The global chaos is going to be further exacerbated and disruption will increase and take inflation to a new level. Pretty scary, folks, taking inflation to a new level. Things are already way too expensive for most people. People are taking on unprecedented amounts of debt on their credit cards. People are house poor, meaning they have a lot of home and they have a lot of equity in their home in some cases, but their monthly expenses are taking a big bite out of their budgets. And we saw that just a couple reports ago. We talked about the biggest plunge in the U.S. savings rate that we've seen in many, many years. So yes, prepare for a worse inflationary shock if these predictions are correct. Please let me know what you think about this down in comments. Now, let's take a look at the other side of the projection here. Why are oil insiders selling? Are oil prices ready to take a dip or a dive or even a plunge? Well, let's take a look at a recent report about these oil insiders selling a lot of stock. And this one is out of oil price. Why are big oil execs dumping millions of dollars worth of stock? Some speculate that an oil price decline may be on the horizon. And also, historically, oil executives are very good at getting maximum value by selling their stock at just the right time. Right now, it kind of makes sense when we looked at what we just talked about previously. If there are new lockdowns or if there is a reemergence or a worsening of another health crisis, maybe even worse than what we saw in 2020, that could cause the price of oil to plunge again, just like it did the first time. Remember, oil went to zero and even negative intraday on the oil price. And we take a look back at March 2020, and we see the negative $37 price, which is absolute insanity, because how does something go to negative? Well, when the price of something is determined on the paper markets and not in the real world, when the price of something is from a derivative and not the real physical tangible product, then you have the potential for things like negative prices in oil. Could you have bought oil and for free, or basically gotten paid to take it because it was negative? Of course not, but that's what happens when things are manipulated with the way things are being traded right now. So will the reemergence of lockdowns and another health crisis send oil plummeting? Well, oil CEOs usually sell for a reason, or because they know that something big is on the horizon, or is something else on the horizon that nobody sees that these executives see. According to calculations made by Bloomberg, the CEO of Hess Corp alone sold stock worth $85 million in the first quarter of 2022, while the head of Marathon Oil sold $34.3 million worth of stock. And for the industry as a whole, we saw much more selling from executives than we saw buying in the first quarter of 2022. What else could be on the horizon that's going to cause this panic and plunge? Is it something that very few people are talking about? Is it political upheaval? Will it be massive food shortages and riots? In fact, there's a recent article out there about the food shortages and what might be coming real soon. There's actually a major financial institution out there now saying when the food system breaks down, everything will break down with it. And could this fear, or could this pending crisis be why the stock market is beginning to top out? So it's not just about rising fears of higher interest rates. It's something big could be headed this way, headed in this direction very, very soon. Now, over the years, most of you have known me to be pretty much a perma bull. But when we look at the stock market over the past few months, we're definitely seeing what's looking like a topping pattern. And if we bring up a chart here, we can draw the line pretty clearly. Instead of the continued uptrend like we saw for many years, something is changing as far as the trajectory. Now, chart patterns don't indicate exactly what could happen, of course. But when you look at everything rolled together, it's definitely getting very, very interesting. Now, let's get to, in my opinion, what is the most absurd articles that I found in a long time. Inflation caused by wages that are too high. That's right. I'm not making that up. It's a real article out of a major financial publication. And this is the Wall Street Journal. Workers are changing jobs, raking in big raises, and keeping inflation high. So it's not about the supply shortages. It's not the record levels of money printing where we nearly doubled the money supply in just 2 years. It's not all the billions of dollars that were pumped into the banks through repo operations over the past few years. It's not the record levels of debt that households have consumed or consumed themselves into. It's not the rock bottom interest rates that were too low for too long. It's none of that. It's people are getting too big raises. Folks, you can't make this up. This is a real article out of Wall Street Journal. So people are making too much money, and that's the reason inflation is staying high. Where we actually have close to 100 million people out of the labor force, because once you're no longer drawing unemployment, you're no longer considered unemployed. So they can tell you that the unemployment rate's somewhere in the 3% range. All right, so completely ridiculous. Please let me know what you think down in comments. Lastly, Orange County home prices hit $1 million. Folks, Orange County's nice. It's not that nice. I live about an hour south of Orange County. On a light traffic day, on a heavy traffic day, maybe an hour and a half, hour 45 minutes. Sure, it's nice weather. But when you're paying for a mortgage on $1 million house, and when you're paying those property taxes, are you going to have much time to go out and enjoy the beach, or are you going to be working 2 or 3 jobs? And are you going to be house poor? And a lot of these homes are cookie cutter houses. Now we're looking at some nicer houses now, some larger houses, but a lot of these, especially these new developments, you're right next to your neighbors. You have no privacy. The neighbors can peek right over and see right into your backyard. Not much of a backyard. You're lucky to get a backyard at all. And I remember just 15, 20 years ago thinking that $1 million house was something special. Like you must be a movie star, you must be, somebody really special and successful to have a home that's $1 million. Now, most people in Orange County have $1 million home just for being there. Folks, if the Fed keeps raising rates like they're doing, mortgage rates went up here again. If they keep headed the direction they're going, we're going to start to see a correction. My thing is, I doubt they're going to keep going. If they do keep raising rates, I will applaud them and I will be the first one to say thank you to them for doing that. But I don't think they're going to continue doing it. I think the first signs of a mega crash or deflation, they could reverse course, or there could be something big coming that nobody predicts or nobody expects, and maybe they're going to continue to tighten and raise rates, and we're going to start seeing a massive correction. Please let me know what you think down in the comments. I still err on the side of the bubbles are going to continue to get bigger, but that's just me. There's pretty much split people out there. Half the people think there's going to be a mega crash. The other half thinks it's going to be continuing rising prices and inflation. So crazy times, folks, but I'd like to hear from you again down in the comments. Thanks everybody for being here. Peace.